Welcome back to ABC 7 at 4. Well, I'm joined today by financial advisor Patrick Romero with Mirau Capital Management. Patrick, thanks for being here today. Now, big news out of Washington. The Federal Reserve has cut interest rates from 4.25% to 4%, the first cut in nearly a year. So can you talk about that for us?
Nichole, thank you for having me. It's a really important topic, and I'm glad we're here to talk about it today.
Well, now a lot of retirees are asking, what could this mean for their money?
A rate cut is a double-edged sword. On one hand, it can lower borrowing costs for things like mortgages or home equity loans. On the other hand, it also means people who are relying on savings accounts, CDs, or money markets may see their interest income shrink. For retirees, that can be a wake-up call. It's not enough to just save money. You need a plan for how that money will produce income, even when rates change.
Well, with so much going on, how can retirees take back some control in times like this?
Control starts with a written plan. Retirees can't control what the Fed does or how the markets react, but they can decide how their money is structured. For example, we help clients balance guaranteed income sources with investments that have growth potential. That way, when rates drop or markets swing, they still have confidence in their monthly paycheck.
So what does a retirement income plan actually look like?
It's about mapping out where every dollar will come from. Social Security might cover part of it, but usually there's a gap. That's where strategies like annuities, pensions, and carefully planned investment withdrawals come in. And it's not just about income. It's also about when to take it, how to coordinate it with taxes, and making sure it lasts for as long as you do.
With rates dropping, timing your Social Security becomes even more important, right?
That's exactly right. The age at which you claim Social Security can mean the difference of hundreds, even thousands of dollars a month for the rest of your life. And with rates dropping, retirees need to be even more thoughtful about how Social Security fits into their bigger income plan. Filing too early could put more pressure on your savings, while delaying can sometimes give you more breathing room. It's all about coordination.
Another big concern we hear is market volatility. So how can retirees protect themselves when the market gets bumpy?
We remind clients that markets are supposed to move, they go up, and they can go down. The danger is when retirees rely only on the market for income. If you're forced to sell investments in a down year, you can lock in losses. That's why we build plans with a combination of steady, reliable income sources and growth strategies. That way, retirees don't have to panic every time the market hits a rough patch.
For someone listening right now, what's the first step they should take?
The first step is to get clarity. Gather your income sources, your savings, and your goals, and then put them together in one picture. Once you see how all the pieces fit, it becomes much easier to make decisions about taxes, investments, and timing. That's what gives people clarity.
Well, if you'd like to know how the Fed's rate cut and future economic changes could affect your retirement, just call or text 915-233-2904 to request your complimentary retirement toolkit. Now, inside, you'll get a personalized retirement tax analysis and a copy of Brian's book, Smart Money for the Backside of Life, filled with strategies to help you protect and grow your wealth. You can also visit their website. You can see the number on your screen for the toolkit and schedule your visit. Patrick, thanks so much for your time today.
Thank you, Nichole. It's always a pleasure.
We'll be right back.
Is sponsored by Mirau Capital Management.